Are you new to real estate, struggling in real estate, maybe a wholesaler or a cash buyer, or maybe you're brand new and you're just trying to figure out better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation investor and realtor with 19 years in the business. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. This is the weekly deal analysis. Let's get into the show. Hey, real quick, before we dive into this episode, if you haven't already, please hit that like button and share this with somebody that you think might find some value in as well. Let's get it. This week on the show, we are jumping across over to Houston, Texas, 510 Sulphur Street. The zip code there is 77034. This is a 3-bedroom, 1-bath home, 1,140 square feet, and they are asking $200,000. They've been on the market for 50 days, so almost 2 months, and it does have a 1-car garage, and it was built in the 60s. Let's dive into the pictures and see what we can find from there. It looks nice and clean on the outside. Here's our lot layout. I like the colorings. I really like light flooring. Looks like LVP. Kitchen certainly looks newer, or at least painted cabinets with new tops. Yeah, we're going with that. Maybe. I don't know. That could be the shaker style. I'm really picky, but doesn't look like they did a great job on the ceiling. Could just be the camera angle. I don't know. There's bedroom, 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 bedroom. Bathroom, nice tile work. And they put a little corner table in there. Not much on utilities or anything like that, but overall, I think it looks in great shape. Let's see what the agent has to tell us. Price to sell. Clearly not enough because it hasn't sold yet. Charming bungalow, no LVP flooring, no carpet, which is certainly a bonus. So anybody with allergies, don't have to worry about it there, or as much. Recent upgrades, here we go. New roof, new windows, blown-in insulation, high efficiency HVAC, water heater, garage door, and opener. All right, so I'm leaning to believe this is a flip, but we'll keep researching through, see if our assumption is correct, and it's close to this airport. So we got a couple estimates on value here of 200 and 193. And average list in the area is 230, 225 for a close. Average 43 days. Now, Houston is a non-disclosure state, so we can only base off of what Realtor is saying, unfortunately. So we have a 3-1, 1,100 square feet, roughly the same size yard, but seems like a little bit bigger house. See if we can find anything here. Not telling us anything. What about this one? Pretty comparable, sold in December. All right, so they're not going to tell us the price, but this one did sell in December. And that's probably the closest thing we can find. So, all right. Based off of this, 3-bedroom, 2-bath versus a 3-bedroom, 1-bath, the extra 300 square feet gives you that second bath. And that only sold for 221, 600, or at least that's what they're estimating the value is at now. So based on that, and it's only 300 square foot difference, but that second bath generally makes a big difference. I'm leaning towards our ARV, or after repair value, is going to be 190, because that's what I think it's going to take to get this thing done. Let's see what else we got going on in the area. So a good amount of competition. It's very similar in sizing, location, and pricing, which is also another reason why I think I'm going to stick to that 190. I think we're nicer than this thing, a little bit bigger. 180. That's a trailer. And that right there is my giveaway. Yeah, I think we stick with that 190 rents. Let's see what we got. Let's see if we can find a house for rent in here. Townhouse for rent. That's all right. So 950. Wow. Paying more for a townhome than you are a single family home. All right, so we got a 950 for a house. Mm, We'll check on a couple of other things because this one's not really providing us much. All right, so we have our rough idea of kind of what to do, taking on to the next step. So now we're going to jump over to the Invest Nest and analyze the cash deal. So I have it pulled up here on the Invest Nest. Awesome site, super user friendly, and I will have some codes down below that you can get 50% off your first month and your first week for free. Try it out, see if you like it, and if you do, great. Come back to this video, and if you would, drop a comment for me. Uh, One thing I love about this is they do include skip tracing. So if you want to call the seller directly, they build it into the price. Financing. If I go back here to the overview, so the estate of this lady Colleen back then, that also kind of clarifies that um, this is a flip because the house looks different, the ownership looks different. So this really just hasn't been updated. And they are telling us our estimated rents are 1722. I'm gonna take that. So at least that gives us kind of a baseline. And estimated value, they're saying about the same thing as the InvestNest. So let's go in and analyze this thing for a cash deal. Purchase price. All right. So our ARV or after repair value we're saying is 190. The condition is perfect. So I'm going to offer them 70% of what I think it's worth, which is 133,000. 133. And we're going to pay both sides of closing. So that will be 4 points. Our hard money lender or DSCR lender, debt service coverage ratio. We'll go into that a little deeper later, but it's an investor loan. They're going to charge us 2 points. Improvements, we said everything is great. We're going to plan to put down 25%. Rates for investors are about 6.75% right now on a 30-year term. And to clarify our rents, we're going to check on the HUD or Section 8 website and also Rentometer. So for a HUD or Section 8, they're saying 1860 for a 3-bedroom is what they are willing to pay up to. And Rentometer average for the area is 1672. The low is 1570. Upper, so we're factoring around that upper range. Based on these three, I think we're going to stick with the InvestNest at the 1722 for rent. Our property taxes, that looks about right. Insurance, um, I factor in 125. Sorry, phone was ringing. Send them to voicemail. So $125 a month for insurance on something like this. Management fee, about 10%. There is no HOA, so we don't have to worry about that. And our tenant, it will be paying our utilities. Reserve fund, or I call it my war chest. That's 5% for vacancy, repairs, maintenance, CapEx, all lumped in. So 15% off the top into a separate fund, because it's never a matter of if something goes wrong, it's when in real estate. And we are real estate investors, so we don't pay full commissions when we sell this thing. Planning to hold it for 10 years. Let's see what we got. You wanted to see if it cash flowed. I know, but I have to ask at least one more time. If you haven't done so already, please hit that like button and share it with somebody else who might find some value in this. Boom. This is a nice cash flowing deal here. So $375 a month, positive cash flow. It's 48,000 and a half out of pocket. Down payment 33,000 based on that interest rate. Gives us a mortgage payment of 646, almost 647. Cap rate is 9.23. It's more of a multifamily thing, but certainly something to factor in. DSCR, which is that debt service coverage ratio. You don't have to turn in your tax returns, W-2s, anything like that. They base the loan solely off the production of the property. They like to see a bare minimum of a 1, but realistically a 1.2, 1.25. This one hits at a 158, superstar. Cash on cash return, a little over 11%. And return on investment is just over 20%. Solid return. 1% rule, if you do follow that, it does work. And another thing about the InvestNest that I like, it lumps all of my expenses together, puts it here, plus my or minus my income, and just gives me what all my fees are. Breaks my numbers out nice and simple. So from year 1, this thing's already an 11%, but at year 10, by the time we plan to sell it, we're pushing a 17.5% ROI or rate of return. Now we're going to do my favorite part and analyze the creative side. Let's see how creative we can get and make this deal work. This is my creative calculator. You can get it off my website, christhompsonteam.com. Free download, and there's a bunch of free useful tools on there as well. Use them, love them. If you want help on it, book a call with me, and I'm happy to see how I can help you. All right, so we said our ARV or after repair value is 190,000. Going creative, I think we go in, you know what? Let's just say 190 at 0% interest. So now we are going to steal our property tax number from here. And now we're going to jump over to bank rate. So we're saying 190, oh, 190, not 1.9. And 5% down payment at a 0% interest. And property tax, that's where we start. Wow. Get that right? No, that's 140. Add an extra. All right, what am I doing wrong here? 143.81. 143.81. All right, so we're just going to go with 143 to have a solid number there. And our homeowners, we said, was 125. So let's see what our, ooh, I like this a lot. So giving them what we think it's worth, I don't think this math is going to work because it's a really good number. And if they take it, awesome. I might try to start with this offer. But if we go back, thinking you know what, let's just ride this out. You know what, let's offer them a 2% interest rate. Let's try to entice them a little bit more. All right, we still got a great rate here. So, hey, we'll give you what we think it's worth, but we want you to be our bank at 2%. So our total PITI or principal, interest, taxes, and insurance is $935 per month. Now we're going to come plug this in at $935 at a 2% interest rate. Our potential rents, we said, were $1,722. $1,722 a month. So that's a gross cash flow of $787, $258.30 to the war chest, management, $172.20, which gives us a net profit each month of $356.50. I like the creative deal a whole lot better so far, but I am the creative guy, so kind of goes hand in hand. Cash down to the seller was that 5%, which is $9,500. The agent, I mean, they're trying. We'll throw them 1%, so 1900. We're not working with the wholesaler, so we have zero assignment fee. Closing cost is going to be that same 4% that we used on the cash deal. Renos, we said everything's perfect because honestly, I think it is. And 2 months of holding is just 2 months of this PITI right here. No arrears, and a good TC or transaction coordinator is going to be about 1,500 bucks. So that gives us a ROI of just over 5 years and $22,000 out of our pocket. And on the cash side, we were looking at $40,000 out of pocket. So basically double. And the returns are what, $10 difference? Yeah, 10, or excuse me, $20 difference. I personally would take this cash deal or excuse me, creative deal all day long over the cash deal. Why would I do that? Because for half of the money out of my pocket, I'm going to make $20 less than I would putting $40,000 down. The math is just better on the creative on this one. Now, creative is not always the perfect answer for everything. As we saw from last week when we did that sub 2 deal in Louisiana, just didn't work. And that is going to do it here for us in the Corner Barn on the weekly deal analysis this week. Thanks for tuning in. Please be sure to drop a comment, and there should be a quiz in here. Which one do you like better, the cash deal or the creative deal? If you get a chance, check that thing out and drop us some comments on your thoughts on this analysis in Houston, Texas. Thanks for tuning in. We'll catch you next week.